Ba-da-bum. Welcome back to Strongman Personal Finance. I am hungover, but I have clients that have paid me money. And when people pay me money, I produce. In this video, we're going to cover the amazing 10x stock that went up a lot, and therefore he should buy it. Nvidia, ooh, microchips, games, cloud, ChatGPT, AI, Nvidia. We're going to cover Nvidia. Now, this was a paid video, full disclosure. I don't endorse stocks, but if you pay me $50, click that link, pay me $50, I'll make a dedicated video about whatever you want to talk about. Somebody paid me to talk about Nvidia. So let's go investigate this company. Is it a 10x by Hinhex? Is it a massive, insane bubble? What is it? Well, let's learn. So here's the stunk performance over the last 5 years. It's up 388%. Nvidia has gone up massively. Look at the stock during the pandemic, okay? Right when the pandemic started, it was trading at $73 a share. It went down a little bit, and then it massively exploded up to a high of 329. Now, I haven't done crazy research into Nvidia, but I highly suspect this came from cryptocurrency. That's right. Crypto, the most clownish, ridiculous, stupid, garbage trash in the world, relies heavily on miners. People, like clowns, just build warehouses and they put computers in it and they destroy the environment, spending all this power to mine cryptocurrency. And Nvidia chips, from my understanding, were used heavily in that process. So chips were in high demand. Okay, we had supply chain issues, everything was shut down, and there was massive demand for chips. So what do you think that did to the price of chips? Sent it up massively. But it was a bubble, as we're going to see, okay? So that, number one, was my reason I didn't like this company back in the day. And you can see the stock price collapsed, but then it's gone up pretty massively again. So where's it going to go in the future? I don't know. Market cap, $773 billion. Revenue, oh my God. So, metrics aren't everything, valuation ratios aren't everything because some companies are growing super fast and they have justified valuations. The price to sales of Nvidia is currently 28.6. So for every $1 of revenue, of trailing revenue, you have to pay $28.06, 60 cents. $28.66 for $1 of revenue, not profit, revenue. That seems pretty pricey to me, okay? I guess this stock is just going to the moon. Yeah. Net income, $3.37 billion. So the price for the trailing 12 months of revenue is, let's see. So PE ratio of 176.9. Obviously, it's going to be off a couple numbers because I don't have the exact numbers right in front of me. But a PE of 176. Now, also, once again, if it's a rapidly growing company, that may not necessarily be bad. I mean, look at what happened with Tesla. They had a PE of like 1,000, and now it's still clownish, but it's lower. But this is a very expensive company. So the market is assuming this company is going to grow massively. Look at its dividend yield, 0.05%. We were talking about this last night on the live stream. Very low dividend yield. Do I care about dividends? No, but sometimes they're an indicator of a stock's valuation. The higher the dividend yield for a stock, it doesn't necessarily indicate this, but if you see a stock's dividend yield suddenly go up massively, either they had a special dividend or the stock price has gone down massively, okay? But it's the opposite. When you see a super low dividend, that could be an indicator that the stock price is very lofty because it's their dividend yield. They're taking the stock price, or over the dividend divided by the stock price. So basically, it's this company looks very expensive, but their forward PE is 39.53. So you could see, potentially they could have had a bad or some kind of weird last 12 months. But their forward PE is a lot lower. So a lot of people are projecting this company is going to do very well in the future. But even then, that's pretty expensive for a forward PE. You're basically paying $39, almost $40 for $1 of earnings in the future. Pretty lofty, okay? But the analysts say buy. They say buy, but then they have a price target that's 11% lower. So what does NVIDIA do? They provide graphics and compute and networking solutions in the United States, Taiwan, China, and internationally. The company's graphics segment offers GeForce GPUs for gaming, GeForce Now game stream service and related infrastructure, and solutions for gaming platforms. Gaming. GPU software for cloud-based visual and virtual computing, automotive platforms for infotainment systems. How much crap do they do? They do a lot of stuff, okay? So let's just look at the financials, okay? Why did the stock go up massively? Well, look at how much the revenue went up. So there were a lot of companies that were just clownish, insane bubbles that were they went up for no reason. There is a reason Nvidia stock went up. Look at that massive explosion in revenue starting in 2020, okay? Remember cryptocurrency? Oh, it's the future, bro. Crypto, bro. And the revenue just absolutely exploded. There was high demand for chips, and there were a lot of supply chain constraints. Makes perfect sense to me, okay? But now the revenue has kind of pulled back. As a matter of fact, we have pretty significant year-over-year declines, at least over the last 2 reported quarters, because that was not going to last. Crypto clown stuff, you should never base your investment on crypto. And a big part of this company's revenue was coming from crypto. People buying chips for crypto. Okay, that's never a good combination. So revenue has gone up massively, and it's still way above where it was in the pandemic. But we'll see what happens in the next couple of quarters. I don't know. Maybe it'll keep contracting, or maybe it'll shoot back up again. I don't know. Maybe crypto will be popular again. Let's look at some margins here. Okay, gross margin has stayed. It's actually, I would say it's trending upwards. Over time, this company's gross margin is trending upwards. However, 2022 was kind of a rare time. 2020, 2021, not 2020. 2020, 2020 was kind of a rare time, okay? But it does look like it's trending upwards, okay? But there have been massive declines in gross profit in 2022. They've gone down pretty significantly, okay? And why is that? Well, it was kind of in a bubble. At least the whole crypto thing was a bubble. So gross margins have, I would say, gone up slightly over time, but recently they've run into trouble in the last couple of quarters. Operating profit. They were massively profitable in 2020. Okay, obviously because of crypto. Their operating profit has plummeted significantly. Okay, it's gone down pretty significantly. They're almost, I wouldn't say they're almost unprofitable, but that's a pretty sharp decline in profit. Okay, I mean, look at that. They were in the almost at 40% operating margins during the clown market, and even before that, in 2016, 2017, they had pretty good margins. 2018, they were doing pretty good. Their margins have definitely collapsed. And then we have profit margin, which has also gone down. So gross margin is, it's taken a hit, but it's not as bad. Operating and profit margin are down pretty significantly. Free cash flow margin, I mean, the trend looks like it's going up, at least until the last couple of quarters. So basically, they were doing well, but a lot of their margins have recently gone down in the last couple of quarters. And that makes sense. That totally makes sense to me because they were kind of in a clownish bubble. We'll look at the balance sheet later. I don't like looking at it on here. Cash flows. Let's just see how operating cash flow is done. So operating cash flow has definitely trended up over time. Definitely trended up. So they are generating a lot of positive operating cash flow, except for, that most recent or that quarter in, looks like the third quarter of 22. They just had a bad quarter there. But overall, their operating cash flow has trended up over time. Makes sense. Let's see. Free cash flow has also trended up over time. So cash is good, but, GAAP profits have gone down. So what does that tell me? It tells me they have a lot of non-cash expenses. I wonder what those could be. And then, of course, we can look at valuations. Let's see. Market cap. That's just crazy, man. This stock has gone insane. Doesn't necessarily mean it's a bad thing, but I always get worried. Like, if I'm going to buy an individual stock, I get worried about a company that's just massively shot up like this. It just reminds me of Tesla. But people want to buy it because it went up a lot. Let's see. PE's insanely high. Price to sales is insanely high. Price to books is also insanely high. I mean, it's very rich. Okay, it's a very, very, very rich company. Debt to equity is trended up a little bit, but nothing crazy. Dividend yield kind of reflects the valuation, doesn't it? Current ratio, extremely healthy. Okay, let's go look at the financial report. So how do I look at financial reports? Well, I've never looked at this one, so I'm just going to start with how I do it. So the first thing I do is read about the company. You want to understand the company. You want to watch some YouTube videos, okay? You want to go to Wikipedia and read. Just like get a broad overview of the company. Then you want to understand the industry. You know, how does the chip market work? Who is its competitors? Blah, 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 blah. You want to have like a holistic understanding, and then you can zero down into the details. So let's see. They pioneered accelerated computing to help solve the most challenging computational problems. Since our original focus on PC graphics, we've expanded to several other large and important computationally intensive fields. Blah, 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 blah. Blah, blah. Has leveraged its GPU to create platforms for scientific computing, artificial intelligence, AI, ChatGPT, AI, data science, autonomous vehicles, AV, robotics, metaverse, and 3D internet applications. I see a lot of clown words in here. I'm not saying it's a clown stock or what they're doing is clownish, but sometimes there's hypes around certain things, okay? What's the hype all about now? AI, ChatGPT, autonomous vehicles, Elon Musk here, robotics, metaverse. These are all the hype bubbles. I can see why the stock's going up. It's like, oh, well, ChatGPT, AI. Let's see. Blah, 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 blah. Innovations at our core. We've invested over $37 billion in research over since our inception. Okay, I don't care about that. Gamers, blah, blah, blah. I remember NVIDIA as like a gaming chip company. I remember like when I was in high school, I had this crappy computer. And then I remember like getting into college, you know, I kept seeing like these computers powered by NVIDIA. And they had like great graphics and they worked great with games, but they were always so expensive. So I never bought one. But that's what I remember NVIDIA is doing, is mostly gaming stuff. Okay. So let's see. We report our business in two segments. The compute and networking segment includes our data center accelerated computing platform, networking, automotive AI, autonomous driving, autonomous vehicles, EVs, Jetson for robots. For what? And then they have the graphics segment, which is their PC gaming graphics, blah, 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 blah. So those are their two main business segments. So when you're looking at this, you want to understand the trends of both of these. I highly suspect that if they have revenue declines, it's probably from the graphics segment, at least year over year, because of the clownish bubble that was in cryptocurrency. They talk about their markets, blah, 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 blah. Gaming, professional visualization, automotive. What do they do with automotive? I'm curious. Automotive is composed of AV, ChatGPT, AV, AI cockpit. I guess that means autonomous vehicles, electric vehicle computing platforms, and infotainment platform solutions. Blah, 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 blah. Okay, so they're getting into the whole AI, autonomous vehicle space, with their GPUs and chips and hard drives and stuff, okay? They outline their business strategies, sales and marketing, who cares? Blah, blah, blah. Competition, who are their competitors? A significant source of competition comes from companies that provide or intend to provide GPUs, CPUs, DPUs. What is all this? Embedded socks. I'll show you a big sock. And other accelerated blah, 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 blah. So who do they mention as their competitors? Well, AMD and Intel. Ooh. And then they have other competitors, Alibaba, Alphabet, Amazon, and Baidu. Let's see who else they mention. Ambarella, never heard of that. Broadcom, Intel, Qualcomm, blah, Samsung. They list a bunch of different competitors here, okay? So this is helpful to understand the whole industry. Government regulations. During the third quarter of fiscal year 2023, so looks like some geopolitical risks here, the U.S. government announced new license requirements that impact certain exports to China, including Hong Kong and Macau and Russia. What did Russia do, bro? The impact of the new license requirements is difficult to quantify, and it may be challenging for us to manage our operations and forecast our operating results due to these requirements. So it looks like there's wasn't there like a big chip export ban to China? And that's probably a big part of NVIDIA's revenues. That's something you got to consider, okay? So they're laying out everything here for you, okay? You definitely want to read all of this stuff and understand it. Diversity, inclusion, very important to the company's profits, obviously. how old the CEOs are. That's wonderful. Okay, let's go ahead and read the let's go read some of the risk factors. What are the risk factors? Failure to meet our needs, blah, 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 blah. Competition. I'm trying to see if there's anything specific here, you know, because a lot of these risk factors are like generic. Oh, there could be a pandemic. Yeah. But sometimes they put some good nuggets in here. Let's see. Where's the whole China thing? It's here somewhere. ChatGPT, AI, autonomous vehicles, Elon Musk. It's the future, bro. Why do they have it buried? It's like hidden in here. Let me just search China, see what pops up. China, my, you know what? China. Failure to estimate customer demand properly is led and could lead to mismatches between supply and demand. So they mentioned something about China ChatGPT. Let's see. Extendedly, the use of our GPUs. They don't really have. Oh, it's so annoying. Okay, here we go. During the third quarter of 2023, the U.S. government, or USG, announced new. Who calls the U.S. government USG? Announced new export restrictions and export licensing requirements targeting China's semiconductor and supercomputing industries. These restrictions impact exports of certain chips as well as software used to develop, produce certain chips to China, blah, 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 blah. The new license requirements also apply to any future NVIDIA integrated circuit achieving certain peak performance and chip-to-chip thresholds, blah, 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 blah. We are required to transition certain operations out of China, that's more money, which could be costly and time-consuming and adversely affect our research and development and supply distributions operations, as well as our revenue during any transition period. Our results and competitive position may be harmed if customers in China do not want to purchase our alternative product offerings. So basically, there's a lot of government risk here, okay? China bad, blah, blah, blah. Don't give them our stuff. Okay, let's see the next part. So I like to look at the business. I like to look at the risk factors, legal proceedings. I mean, you can look at that. I don't really care. Sometimes it's important. It's good. It's good to read everything because sometimes you might see something in legal proceedings that is a big deal, like with what's that company? 3M. So you obviously want to read everything to make sure you don't miss it. But I'm skipping that because I don't feel like reading about legal proceedings. Okay. So let's do management's discussion and analysis. So here you generally will find some, this is like the management talking to you and giving you information that may not necessarily be perfectly highlighted in the financial reports. Now, I wonder if they show disaggregated revenue here. Here we go. Okay, they got revenue. I want to see disaggregated revenue. Let's see. Okay, data center revenue was up 41% from a year ago, led by strong growth from hyperscale customers and reflects purchases made by several CSP partners. Gaming revenue was down 27% from a year ago, reflecting lower sell-in to partners to help reduce channel inventory levels as global macro conditions and COVID-19 related disruptions in China weighed on gaming demand. Oh, what about the crypto? Do we mention that here? Professional visualization revenue was down 27%, following lower sell-in to partners. So we can obviously, here's where the big declines are. Automotive revenue was up 60%. Okay, that's a growing one. Blah, 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 blah. I wish they would have that in a more summarized, like actually in data instead of just talking about it. Here we go. Revenue by reportable segments. So obviously compute and networking is up and graphics is down. So that's why their revenue is flat. The graphics portion is going back to where it probably should have before the pandemic. Let's see. Concentration of revenue. No customer represents 10% more of total revenue for this fiscal year's 2023 and 2022. Okay. Revenue from sales to customers outside the United States accounted for 69% and 84% of total revenue for the fiscal years 2023 and 2020. Wow, they sell a lot internationally. I did not know that. Look at that, ladies and gentlemen. 84% in 2022 and 69% in 2023 are international revenues. And that brings into play a whole nother basket of concerns and worries. Currency translations, which geopolitical tensions, all that weighs into this. Okay. Let's see. Gross margin was 56% for fiscal years 2023 and 2022. The decrease was primarily due to 2.17 billion of inventory provisions, which consists of approximately 1 billion for inventory on hand and approximately 1.3 billion for inventory purchase obligations, in excess of our current demand projections. So it looks like they had some pretty significant write-downs in their inventory. Let's see. Sales of inventory that were written off, blah, blah, blah. Okay. Let's see. Yep. Basically, inventory write-downs are significantly hurting their gross profit. Let's see. R&D spending. What are they doing with R&D? So R&D spending has increased pretty significantly. It's now 27% of revenue versus the prior year. Sales in general and admin are up 1%. As a percentage of revenues, but they're up 13% total. Acquisition termination costs. 5% of revenue. What is that? Acquisition termination cost. What is that? We recorded an acquisition termination cost related to an ARM transaction, reflecting the write-off of payment provided at signing. Acquisition termination cost. Yeah, I wonder what this ARM transaction is. That looks like a one-time expense, though. So, if you're doing analysis, you can maybe exclude that. But that did cost them 5% of their revenues. So they're definitely dumping a lot of money into R&D. I can tell you that for certain. That's a lot. And then they had this acquisition, that one-time expense. Let's see. Interest income's up. Wow. Interest expense is flat. That's fine. And other. All right. So some interesting stuff in here. You should definitely read this. Returning capital to shareholders. During the fiscal year 2023, we returned 10 billion in share purchases and 398 million in quarterly cash dividends. That's so stupid. As of January 29th, we are authorized to repurchase up to 7.23 billion through December 2022. Yeah, this is the best time to buy back shares after the stock has run up massively. Some debt maturities here. Climate change. Oh, yeah. So important. Okay. So interesting stuff here. Controls and procedures. Okay, let's go ahead and look at so we've seen MDMA. Let's go ahead and look at the financial statements. Which I guess I was just at and then I jumped away. Let's see. Let's look at the auditor's report. We've audited. In our opinion, the consolidated financial statements present materially in all material respects. So the auditors are saying the numbers you're looking at are probably good. And let's see. We conducted our audits. The standards perform. Let's see. Our audits. God, can they just highlight the most important parts? I hate auditors. They're audited by PwC. So it looks like there's no major issues with auditing. Let's see what they say here. It's descriptions. Company charges cost of sales for inventory to write down inventory for excess or obsolete. Most of the company's inventory provisions relate to excess quantities of products based on the company's inventory levels in future. As of January 29, 2023, the company's consolidated inventory balance was 5.15 billion. And the outstanding inventory purchase and long-term supply obligations, of which is 4.9 billion, of which a significant report relates to inventory purchase obligations. Okay, so basically they were just looking into the auditors paid special attention to provisions for excess or obsolete inventories, basically because they had a lot of huge write-downs. Okay, let's look at the revenue. So revenue's flat. Obviously, revenue's up massively from 2021, hugely. But year over year, it's flat. Cost of revenue went up. They said at least because of inventory write-downs. And gross profit is down. R&D, we know, went up massively. They're definitely dumping more money into R&D. Sales and general admin and a one-time acquisition charge. So their income from operations without that one-time charge, it looks like, would have been 424 plus 1353, 5577. And if you divide that by revenue, their operating margin would have been 20.6% if they didn't have that acquisition termination cost. So if we compare that to historical, let's see. Yeah, their inventory would have been a lot. Their operating profit would have been a lot better without that write down. I can tell you that. But obviously, it still isn't as great as historically. Let's see. Interest income's up. Obviously, interest expense is flat. I mean, nothing. The only thing crazy I noticed about the income statement is obviously their cost of goods sold has increased, and they're doing that because they're charging write downs. So you have increases in inventory write downs. Basically, their inventory, they probably the value of the inventory is less than what they paid for it, basically. So they were writing it down. That affected their gross profit. And they had this one-time charge of 1.3 billion, it looks like, for acquisition termination cost. All right, comprehensive income. Is there anything crazy on here? Not really. There's really nothing here. It's good to check this. You know, some companies have a lot of items that skip the income statement, especially banks, that you want to look at. And when you look at the statement of comprehensive income, you're going to see derivative cash flow hedges, gains or losses. You're going to see currency translations. You're going to see gains or losses from available for sale debt securities. Those pop in here, but they don't hit the income statement. They come in after it. They affect equity, but they don't show up on earnings per share. But you want to check that stuff because it does ultimately affect a company's profit and loss. Overall profit and loss. All right. Let's see. Let's look at the balance sheet. Cash is up a little bit. Marketable securities is down pretty significantly. They could have used that for anything. Accounts receivable is down a little bit. Inventories is up a little bit. That's interesting. Prepaid expenses. So overall, their current assets have gone down year over year by about 5 billion. That's mostly because of cash and marketable securities going down and inventories going up. Property, plant, and equipment is up a little bit, nothing crazy. Good operating leases up, nothing crazy. Goodwill is up a little bit. They made some kind of acquisition. Intangible assets is down. That could have been amortizations. Deferred income tax assets, so that's taxes they're going to save in the future, is up by about 2 billion. Okay, that's good. And other assets, really no change. So overall, their total assets have gone down by about $3 billion. And the largest decrease came from cash, basically. They spent a lot of cash somewhere, probably share buybacks, like they said. Let's see. Current liabilities. They got a little bit of short-term debt coming due, but they got plenty of cash. They could pay off all of their current liabilities with no issue if they wanted to. Total liabilities, they could not pay it all off at once, but they're doing fine. Okay. I don't think this company is going bankrupt anytime soon. I think they're going to be okay. Let's see. Common stock. So the comments, they've been buying back shares, it looks like, but it looks like additional paid-in capital has gone up. That could be because of stock-based compensation, accumulated other comprehensive loss, insignificant, and retained earnings. Am I looking at this right? Has gone down pretty significantly. I wonder if that's because of stock buybacks. Now, I didn't know this before. I actually learned this when I was doing another financial statement analysis. So retained earnings is a company's accumulated profit and loss. So a company makes a profit, it gets closed and increases retained earnings. If a company has a loss, that decreases retained earnings. If a company pays a dividend, that decreases retained earnings. But there's also a accounting thing where if you buy back stock, but you retire it instead of putting it into treasury, it's basically called a constructive retirement. And what that means, I think that's what they call it. What that means is when you see retained earnings going down and they're not really paying a big dividend and they're booking big profits, it's probably because they're buying back and retiring stock. That's a big thing here because retained earnings should not be going down unless they're paying a huge dividend and they're not having a lot of profits or they're losing money, which I don't think either of those is the case. So I think they're buying back stock and completely retiring it, which is decreasing retained earnings because retained earnings went down by $6 billion. That's a lot. That's a lot. So I think they're buying back a lot of stock. And that is, they're probably buying it back very expensively. So I can tell you right now, I'm not a big fan of that. Okay, I think that's stupid. Wow. that's a pretty big drop in retained earnings. We'll see more in a second. Okay, so here's the statement of consolidated statements of stockholders' equity. So here's where you can really see all the details of what happened. Okay, so we'll start with common stock and we'll go from 2022 to 2023. So they issued 31 in millions except for share data. Okay, what is it? It's shares in thousands? In millions except for share data. I would assume it would be in thousands. Anyway, they issued 31 shares, but then they bought back 63. So net on net, their net shares have gone down. So they've bought back more shares than they've issued. So that's partially why they're buying back shares. So we can see overall, at least this last year, they've started to buy back shares. Very expensive shares. Amount, blah, 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 blah. Let's see. Additional paid-in capital. Why did additional paid-in capital? Well, it went up because of stock-based compensation. And it went down due to tax withholdings. Basically, when companies award stock-based compensation, they do have to withhold some shares for, they usually sell the shares to help pay for taxes because it's technically compensation. Like, if I remember this correctly, RSUs show up on your W-2 from what I remember. Like, and they're actually, when they're awarded to you, they're included in your income. Not tax advice, but I remember seeing that. So, and you have to pay taxes on income, obviously. So when you get awarded some stock, some of it probably gets sold and then used to pay your taxes, which makes sense because otherwise you'd have to pay the taxes with your own cash. So that's why you see, a decrease there. And yeah, so basically additional paid-in capital went up mostly because of stock-based compensation. So they're awarding stock to their employees. They're issuing the stock when it's exercised, and then they're buying it back at very high valuations. So the employees are making a killing because they're exercising their stock options and they're buying the stock for less than its actual value. And you as the shareholder are having to buy it back basically at its actual price on the market. So you're kind of getting screwed there. I'm just saying. Treasury stock. Treasury stock. Retirement of treasury stock. There you go. See that? Retained. So here's what happened. So they're retiring. They're retiring that basically when you buy back treasury stock, you're just keeping it there and you can always give it back out. Companies will buy their own stock back and then they'll give it back out. Okay. That's putting stock in treasury. So when you see treasury stock, that means a company bought stock back. When you see a retirement, it's basically like those shares are gone. Like the company's not going to give them back out. They're retired. They're extinguished. Okay. So you can see retained earnings. They're booking profits. Look at that. Their beginning retained earnings was $16 million. They booked a $4.3 billion profit. But with the share repurchases, holy freaking crap, man. That destroyed $10 million of retained earnings. And then, the dividends are like insignificant. So without these share repurchases, they would have had a much higher retained earnings. Oh my God. It's ridiculous. I think that's stupid. In my humble opinion. Okay, let's see. Cash flows, stock-based compensation, $2.7 billion. Depreciation, let's see, deferred income taxes. So that was wow, that's interesting. They booked a pretty significant gain, it looks like, on deferred income taxes. Wow. Okay. Basically, a deferred income tax is when you save money. It depends on what it is. You have deferred tax assets, deferred tax liabilities. A deferred tax asset, if you see that on the balance sheet, that means they paid more taxes now, but they're going to save taxes in the future. It's a temporary difference. A deferred tax liability means they save taxes now, so they're going to pay more taxes in the future. So they had some kind of big tax event where they probably paid more tax now, but they're going to save tax in the future. That's what I expect happened there. Accounts receivable, inventories. Yeah, it looks like a big change. The biggest reason that operating cash flow is down year over year is this year they bought a lot more inventory. The change in inventory was more significant year over year, 2.5 billion. So that increase in inventory was a big reason that they had a lower operating cash flow than the prior year. But overall, I mean, they still have positive operating cash flow. I mean, it hasn't collapsed, but there's definitely there's pretty significant differences between net income and operating cash flow. All right, let's see. Investing cash flow. So let's see. Purchases of marketable securities, purchases of PP&E, very tiny acquisition, investments. Okay. Yeah, I don't really see anything crazy under investing. Most of the investing cash flow was just buying and selling marketable securities. Basically, they sold a bunch. Okay, here's where the big dog is. So basically, most of their cash. Remember, I said their cash balance went down and their marketable securities balance went down. They took a lot of cash and they took a lot of marketable securities, converted them to cash, and then they bought back a ton of stock. They spent $10 billion plus another 1.4 billion for taxes on restricted stock units to buybacks. They spent a boatload of money buying back stock. Holy freaking crap, man. That is craziness. Let's see. Yeah, I'm trying to think. Let's see. Yeah, that seems crazy, man. I think that's a stupid thing that they're doing. What else? So overall, I mean, I'm looking at this company. I think it's too expensive. I think they're buying back stock at stupidly high nose-bleeding valuations. And I think it's just an overall insanely expensive company. Like, it's not going bankrupt, but some of their decisions I think are not good. They're destroying a lot of shareholder equity to just buy back a little bit of stock. They're really not buying back a lot of stock. Let's see. Shares outstanding. Yeah, they barely bought back any stock. And they spent $10 billion. $10 billion just to buy back, like, not too many shares. Okay. It's stupid. I don't understand. That's crazy to me. Okay. Like, there's no better way you could have spent the cash than to buy back stunk at high valuations. This is ridiculous. So I don't know. I'm not a fan of this company at this price. I mean, I'll keep buying VT. You do whatever you want, but that's kind of my assessment of Nvidia. You know, they're riding they're really involved in the bubble hype train. AI, this and that, blah 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 blah. And yeah, that's pretty much it. Let's see what people have to say. Oh my God, there's a lot of comments. By the way, if you want a dedicated video, there's the link. You send me $50, I'll make you a video. When are we sending it to the truck stop? Oh my God, I've been going for 38 minutes. Oh my God. And Nvidia is heavily investing in it. They are spending a lot of money on research and development. That company is not good, IMO. They are a crypto mining supplier. The reason it went up, the chart is similar to Bitcoin. That was my exact concern about this company. And now that graphics part of their revenue has collapsed. Let's see. Who would have thought that the best financial advisor YouTube doesn't wear a shirt? I know. Max your tax advantage accounts and buy broadly diversified index funds. I'm a genius. Nothing was sweeter outside tattooed nutsack when Jeremy talked about how that shoe company dropped, and yet it was a part of his dividend portfolio. We pay dividends, bro. Passive income. Strongman, I understand your thought process on high growth, loss making companies, but some of these companies have a future. In your opinion, that these companies should IPO after they're profitable? I mean, honestly, I don't really have an opinion on that. I mean, I don't want to stop a company from IPOing because it's unprofitable, but it's up to you as the investor to know if it's a clown company or not. I mean, that's ultimately your judgment. Because who gets screwed on the IPOs is generally retail, I think. I think with IPOs, like the underwriters make money, the company gets a cash influx. The executives they can cash out some of their shares. All the employees, if they have stock, can cash out shares after the IPO. But who gets screwed is a retail investor that says, oh, it's an IPO, it's the future. And they go and buy it and the stock crashes. But I mean, I don't want to like ban IPOs or not let companies get IPO'd until they're profitable. Because sometimes companies need capital. That's why they IPO. But I don't know. I just think people should be careful. Or is your opinion that I should invest in them while you're always within the sidelines so they're highly profitable? I mean, generally how I think of it is, if I see a company getting closer to profitability and they're still growing and they have a future, okay, maybe it's not a bad idea. But I don't like when I see these companies that just lose money hand over fist and they never make money. And all they do is survive based on more debt issuance and more stock dilution. That's what I don't like. Like Tattooed Chef, perfect example. I hate that company. But just because you're not profitable doesn't mean you don't have a future. Most companies start off unprofitable. I appreciate crypto because I get to hate watch crypto shills on YouTube. My favorite art chick I would bet was a stripper before she got knocked up, and a bald dude with a smooth radio voice. Oh, God. Let's see. And by that logic, will you never participate in the growth journey of a company from a high growth cash burning to become highly? I mean, I participate in all the companies with VT. AMD PE 438, Nvidia PE 180, short both and buy Qualcomm PE of 11. Not financial advice. They're very expensive companies. That's all I'm going to say. I like to diversify. I have 0.000147% of my money in cryptos. That's good. That's real. I mean, that's fun. I'm fine with that. Oh my God, there's so many comments. Nvidia is a leading company in its industry, but generally overvalued. Yep. Qualcomm going to be hurt by China issues more than most. That's why it has a low PE. Nvidia likes to benefit from AI more than almost any other company, minus some software. But how much will it reflect in future profits? No one knows. A lot priced in. Exactly. I mean, Nvidia is lofty for a reason. There is a reason because there is some kind of future people are assuming is going to happen. The question is it? I don't know. You go ahead if you want to buy it. Ah, man, I'm thirsty. I'm hungover. Let's see. USG. That's so stupid. US government or USG. Strongman, I just bought the UK equivalent of VT. Thank you for showing me that passive investing is the key to real long-term wealth. Yeah, man. Like once a bull market comes down, I'm going to be rolling in dough, dude. I've been buying like crazy over this last year and a half with the market down. I've been funneling money into VT. Like, I mean, yeah, I bought some individual stocks. Like I bought Bob and I'm down on that. And I bought like JD a little bit in there. I'm down on those stocks. But overall, like, I mean, I'm down on my VT purchases too. But when the next bull market comes around, oh man, I've acquired so many shares. Woo, baby. I'm going to be rolling in dough. Let's see. 4000 series GPUs are way too expensive for gamers. PC gaming has been pissed with NVIDIA. Yeah, I never, like, I always wanted to have a NVIDIA chip. They're just expensive, man. I don't know. I mean, I don't play, like, difficult games. I play, like, StarCraft Brood War. I was playing StarCraft Brood War on a computer made in 2000, okay? You don't need an advanced computer for StarCraft Brood War. Tried acquiring ARM, but it was blocked. Okay, yeah, they had to write off a lot of costs for that, but that's a one-time thing. Buybacks are weird with equity. Yeah, either they put it in treasury stock or they retire it, and then that goes against retained earnings. So basically what's happening here is companies can't record gains or losses on buying and selling stock, their own stock. So what happens is instead of recording a gain or loss through income, they just go directly to equity. They either reduce equity or increase equity. So if you see retained earnings going down, technically what it means is they're buying back their stock for more than they gave it out for by massive degrees. So they technically booked a huge loss on buying back their stock that did not hit the income statement and went directly to the balance sheet because they're buying back the stock. Isn't there tax consequences for having a lot of accumulated retained earnings on the balance sheet? Honestly, I've heard about that. It's the some kind of tax on like excess accumulated retained earnings, but I've never seen that. I don't know. Maybe I'm just inexperienced when it comes to C corporation taxes, but I've never like dealt with that on any of the tax returns that I did. Let's see. But then again, I've only been doing taxes for a year and change, so don't take my word for it. I like when a company pays their employees stock and then buys it back. That way they can pay the share buyback tax for no benefit and also give money to the Wall Street. I mean, it's really, they're just like, the employees are getting the good deal, man. Like, they're getting the stock cheap. And then the company's owners get screwed with the buybacks. Let's see. Maybe they do a reverse stock split. Let's see. What are your thoughts on the fact that UCLA is shilling tax? Is that true? If that's true, I'm doing a video about that. That would be funny. Email me. If that's true, email me. Does it make sense to subtract stock-based compensation from free cash flow? No. Look. Stock-based compensation is added back under the operating section of the statement of cash flows because it is a non-cash expense. When you are reconciling net income to operating cash flow, you must add back non-cash expenses. That is why it's added back. That's it. Joseph Carlson does not understand accounting. He doesn't know what he's talking about. I don't care if he's a huge freaking YouTuber. It annoys the crap out of me that Joseph Carlson has the audacity to tell the accounting profession, CPAs with 30, 40 years of experience, that they are doing the statement of cash flows wrong when he's a freaking YouTube clown. Oh, you should be able to subtract that, blah, 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 blah. God. Anyway, that's my rant. Let's see. I was watching the tattooed chef funeral. I was laughing because I sold all my Shada, took all the dividends and rolled them in. There you go. Good boy. Let's see. Are you buying banks? I'm buying VT, bro. Can I send you the story about tattooed chef? And yeah, you can do that. I haven't been on Discord in a while, but I'll check it out. I'll go on there just for you. Please send it to me. So, are you scared I'm gonna like stalk you if I have your email or something? So, is this stock on an 8-pillar thriller? Oh no, it's not. Oh, average 5-year PE. Buy my software, bro. All right, guys, that's it. Hope you enjoyed the video. If you want a dedicated video like I did here, I will not make stock predictions, but I will look at the financials and read the 10K. You click that link, you send me some money. Anyway, hope you enjoyed it, and I'll talk to you guys later. Cheers.